Okay, let's dive right into this explainer. Today, we're unpacking a massive, often completely hidden financial risk that Australian business owners are facing literally every single day. I'm talking about what happens when the ATO, the Australian Taxation Office, comes knocking. We're going to demystify exactly what tax audit insurance is, how it acts as a shield for your business, and why waiting until you actually need it is, well, it's the biggest mistake you can make.
To really grasp why this matters, we first need to look at the sheer scale of the ATO's auditing machine. And honestly, it's staggering. We're talking about the tax office conducting over 500,000 reviews and audits every single year. Just let that sink in for a second. 500,000 businesses and individuals are tapped on the shoulder annually to explain their finances.
But here's where it gets kind of scary if you're running a smaller operation. Small businesses are actually 3 times more likely to be selected for an audit than large corporations. You might think, hey, I'm flying under the radar, I'm not a massive multinational, but the stats, they tell the exact opposite story. You're sitting right in the crosshairs.
Which brings us to the ultimate question. The one most business owners, company directors, and SMSF trustees only think about when it's way too late. If the ATO audits you tomorrow, who pays your accountant's defense bill? The average professional fee for a tax audit is over $8,500, and for complex ones, it can be significantly higher. No joke. So here's our roadmap for today. We'll be looking at 1. The ATO audit machine, 2. Hidden costs of compliance, 3. How the insurance works, 4. Real-world audit scenarios, and finally, 5. Protecting your business now.
All right, jumping right into Section 1, the ATO audit machine.
The reason their reach has expanded so dramatically is because, well, we aren't dealing with manual paper receipts anymore. The ATO is a highly sophisticated, data-driven beast now. They're matching over 1 billion transactions annually. 1 billion. They use advanced AI and machine learning to constantly scan for anomalies, generating automated audit flags. So your data is constantly being cross-referenced against industry benchmarks without you even knowing it.
The crucial point to take away here is that recent crackdowns signal a massive increase in scrutiny across the board. For example, as of April 2025, the ATO extended its BAS refund withholding window from 14 to 30 days, and they forced thousands of businesses onto monthly BAS reporting. The net is absolutely getting wider.
Moving on to Section 2, the hidden costs of compliance.
There's this really common misconception that if your tax returns are perfect, you don't have to worry. Actually, scratch that, it's a dangerous misconception. Even with flawless records, proving your innocence costs money. If your business fits into any of these risk factors on the matrix, like being cash-heavy, relying on contractors, having rapid revenue changes, or complex structures, your statistical likelihood of an audit jumps. The AI spots those flags, and if they look, you absolutely have to respond.
And this brings us to a really harsh reality. When the ATO knocks, your accountant literally has to drop what they're doing. They spend weeks gathering records, writing highly specific responses, and attending representation meetings. Every single one of those hours, it's billed directly to you. You're paying thousands of dollars just to prove you did nothing wrong.
Okay, let's get into the solution in Section 3, how the insurance works.
We need to draw a hard line in the sand right here. This policy is a shield for your professional defense costs, your accountant, and legal fees for responding, prepping docs, and negotiating. But contrast that with what's not covered. It doesn't pay for any actual tax you might owe, and it definitely doesn't cover ATO penalties or interest. It is strictly covering the professional cost of defending your position.
Providers like Pocket offer policies that are incredibly robust. A standard cover usually goes up to $100,000 per audit, with options to reinstate that limit up to $200,000. And the best part? There's usually zero excess on these professional fees. Plus, you can tailor it for your business, your personal director returns, or even an SMSF. It covers the whole shebang, from GST to complex income tax audits.
However, the insurance does have strict boundaries you need to know about. You're obviously not covered for audits that started before you bought the policy. It absolutely excludes criminal fraud or deliberate misstatements. And this is a big one. DIY lodgements are generally excluded. You really must be using a registered tax or base agent. Oh, and simple routine data inquiries aren't covered either.
Let's put this into perspective in Section 4, real-world audit scenarios.
Imagine you run a business relying heavily on contractors.
The ATO decides to do a deep dive to see if you've correctly classified them, and they initiate an audit covering 3 full years of your PAG withholding history. Because of the legal complexities around employment law, both your accountant and your lawyer have to get involved to respond. Defending that complex classification across 3 years? That can easily rack up a massive professional fee bill. You could be looking at $32,000 in out-of-pocket expenses, but with tax audit insurance in place, those fees are entirely covered.
Or consider a scenario that happens way more often than you'd think. The ATO audits your company, and while they're looking under the hood, they decide to simultaneously extend the review to your personal tax return as the director. You now have 2 audits running at the exact same time.
Suddenly, you're facing a tidal wave of paperwork and defense strategy. In a dual audit scenario like this, combined defense fees can quickly hit $45,000. If you had the Business Plus Director's option on your policy, you wouldn't be losing any sleep over paying your accountant that staggering sum.
Finally, let's wrap this up in Section 5, Protecting Your Business Now.
Knowing the risk is only half the battle. I literally cannot stress this next point enough. Timing is everything. The golden rule is that your cover must be in place before the audit begins. If you wait around until you get that ATO notice in the mail, you are already too late. You just can't buy a policy to cover a fire that has already started.
But if you are proactively covered, the process is incredibly straightforward. If they contact you, just follow these 5 simple steps. Notify your provider within 60 days, forward the ATO notice, get your tax agent on it, hold on to all your invoices, and submit those fees for assessment. It really is that simple.
And getting this protection in place is easier than ever. It's a quick online quote, you get an instant certificate, and your cover starts immediately. Best of all, for most businesses, the premium, which is usually just a few $100 a year, is generally a tax-deductible expense as a cost of managing your tax compliance.
So, I'll leave you with this final thought. You wouldn't dream of leaving your physical assets or your office uninsured against fire or theft, right? So why are you leaving your financial innocence entirely exposed to the massive, unpredictable cost of an ATO audit? Why risk a crippling defense bill when protecting your peace of mind is just a few clicks away?